Good morning, this is Tim McGowan with the Finance News Network. Stocks slipped overnight after June inflation data hit its highest level since 1981, adding to growing fears that the Federal Reserve will get more aggressive in its fight to tame rising prices. The Dow Jones Industrial Average dropped 0.6%, while the S&P 500 dipped 0.45% and the Nasdaq Composite lost 0.15%. Inflation in the US has jumped to a new 41-year high, driven by broad-based price increases in gas, food and rent. Annual consumer prices rose 9.1% in June from a year ago, up from an 8.6% jump in May and ahead of economists' expectations of 8.8%. With gas prices at the pump the major reason for the rise in consumer prices. Energy prices surged 7.5% on the month and are up 42% on a 12-month basis. The inflation data was pretty much factored into market prices, hence such a mute reaction by markets overnight, with Wednesday's hot CPI reading also prompting questions over whether inflation has reached its peak. Either way, the market is now pricing in an 80% chance of a 100 basis point hike later this month. Across the market, S&P 500 sectors were mixed. Consumer discretionary rose nearly 0.9%, boosted by gains from Domino's Pizza, Bath & Body Works and Tesla, while Boeing, Walgreens and United Health slid 2% each, dragging the Dow into negative territory. Battered tech stocks like Amazon and Netflix staged a comeback on Wednesday, rising more than 1% each despite mounting growth concerns. The move broadly brought the tech-heavy Nasdaq into positive territory. Twitter shares rose nearly 8% as the social media company sued Elon Musk. Of note, the biotech sector looks to have found a floor, with the SPDR S&P 500 Biotech ETF outperforming once again, despite negative news flow, rising for its seventh time in the last 8 days. The biotech sector has, of course, been one of the worst market performers this year. There is also much anticipation ahead of tomorrow's unofficial start of the second quarter earnings season in the US, with reports from several big banks. The earnings risk theme remains an overhang given the combination of unchanged 2022 and 2023 consensus estimates, growth slowing, lingering inflation pressure and currency worries. There's going to be plenty for the market to focus on moving forward. The US dollar was firmer on the yen cross but weaker elsewhere, with the euro earlier falling to parity with the US dollar for the first time since 2002. One Australian dollar has strengthened slightly compared to the US dollar, buying 67.66 US cents. Gold gained 0.62%. Silver was up 1.24%. Oil gained 0.48%. Copper was up 1%. And iron ore futures are pointing to a 1.7% rise today. On the ASX this morning, the SPI futures are pointing to a flat start. This is Tim McGowan for the Finance News Network. Have a great day.